Today I'm going to explain how a non-US resident, a guy in Canada or a guy in the UK or a guy in Mexico can have a US LLC and sell e-commerce into the United States using third-party fulfillment companies and not pay income taxes in the US. Now it's a really interesting topic because I get this question a lot, and I literally had a guy ask me today, so I said I'm going to make a technical video and go a little bit more into the weeds about how this works. Now in this video, I'm going to talk about how taxes work in general for non-residents. I'll keep that short. The three things you need to avoid to make sure you're not paying taxes in the US. Some mistakes I've seen clients make and how you should structure and what you should actually do, okay? In general, how taxation works in the US for non-residents is that there's FDAP income, which is withholdable at source. So if you are a non-resident and you're getting dividend income or royalty income or passive, generally passive types of income like rental income, that income is subject to withholding by the source. So if I'm an American and I'm paying someone else interest because I got a guy in Italy gave me a loan for $1 million and I pay him interest, I have to withhold taxes on that. Now that's passive income. That generally doesn't apply to earned income. That's FDAP income. Now, determining whether earned income, like e-commerce income, business income, services income, is subject to taxes, that's generally not subject to withholding. That's going to be subject to taxes to be paid by the actual person. Now, that gets us into the three things to avoid to make sure you don't have effectively connected income with a U.S. trade or business. Now, this is thrown around a lot, the ECI and the U.S. trade or business portion. And this is where I'm going to spend most of the video because I want to go over what is a U.S. trade or business. The term trade or business is used throughout the code, but it doesn't really have a single comprehensive definition. This is generally governed by U.S. common law and the courts and IRS determinations, but they have a couple code sections around 864, IRC 864, and the regulations that talk about the two concepts of having a U.S. trade or business. And that's a fixed place of business in the U.S., which generally if you're operating online and you don't have an office in the US and you're not conducting business there like a shoe store, you won't have a fixed place of business. So that one's easy. And then the second one that we're going to talk about is having a dependent agent in the US. The dependent agent issue is what we're talking about with this 3PL. You're dependent on the 3PL, but they're not dependent on you. So a dependent agent comes down to a person in the US. Generally, it's an employee. It's someone who's working for you every day and, really important, can conclude contracts on your behalf. This is going to be generally employees and someone who works just for you. Now, there's ways to have contractors in the U.S. and have them not be employees and have them not be dependent agents. It would be independent in their ordinary course of business. Well, that's exactly what a 3PL is. A 3PL is operating their own independent business. They have multiple clients, and this is their ordinary business, is receiving products from people and then forwarding them to where they need to go. Just having a 3PL does not mean that you have a dependent agent in the US, and that's the big distinction there. So that's the difference between a dependent versus an independent agent. For example, if you had your own warehouse and your own warehouse staff that received and forwarded the stuff, then that would be a problem. This is getting into some of the mistakes. I've seen people start their e-commerce stores and mail all their products to their uncle's house, and their uncle is forwarding all the mail. That's not his regular business. He's just helping you out, so that means you're doing business in the US. You have a lot of risk there. Generally, you're not going to have any kind of taxes withheld on payments for services or for products. So if I'm paying for products, I'm never going to withhold taxes. That's just not how it works. It's only on passive stuff. So you're not going to have taxes withheld, so that means the taxes are at your level. That's your responsibility as the foreign seller. Now, when you have to pay taxes is only when you have effectively connected income with the U.S. trade or business. So the U.S. trade or business comes first. You have to have that first. And that means to have a U.S. trade or business, that means you're having a fixed place of business or agents in the U.S. And we just talked about those again. Now, let's say you do have this fixed place of business. Then we get into what is effectively connected income. Generally, the IRS is going to try and tax all of it if that's the case. That's why we want to avoid the first two steps. But if there's a tax treaty, we could potentially utilize the treaty to say that there's different, the income should be sourced differently based on where it's manufactured, where it's shipped from, where it's received, who it's sold to, how it's sold, and all these different factors. It's very complicated, but we're going to generally, in almost all cases, avoid this whole thing by not having a trade or business, which is as simple as not having an office and working with a 3PL that has other clients. Let's say you have a warehouse, or you want to rent a warehouse The way you get around that is by opening a new US C Corp. Let's say I have a client that has a warehouse in Texas, so he opens a Texas corporation, and then his business does business with that Texas corporation. So his e-commerce business, his LLC online, does business with this Texas C Corp, and that way they can send money. They send the stuff there, they pay them at fair market value, and the e-commerce sales aren't subject to U.S. taxes, just the profits from the 3PL that they set up in Texas. And that's under a separate taxable entity in the U.S. So that's how you do it. If you need an entity in the US or you want to have your own warehouse, you definitely can, but that's a completely separate business. So I've seen that done incorrectly in the past, and I've also helped clients set it up correctly in the past. Now, if you're using a foreign company and you think you might have some risk, like a foreign corporation, I would definitely recommend a protective return. So if you're selling out of a UK limited company into the US, and you think you might have some US trade or business because you had your own warehouse for a couple months, or just because you want to be extra secure, I would recommend filing a protective return. That's a Form 1120F to just have it on the record. So what happens if you don't file a protective return and the IRS challenges you, you can't use your expenses later and they're going to tax you on the gross. And that's going to just bankrupt you, because most businesses, if they're running a 30% margin at what the 30 of the tax rate is, then you're going to lose all your margin on taxes. At the end of this, what should you do? What are my recommendations? Well, simple recommendations. You can really be a foreign person, open an LLC, open a U.S. bank account, keep your profits in the U.S. and pay no taxes by just doing that, by having the LLC, having the bank accounts, and having no employees in the U.S. You can have contractors, but specific agreements, and they can't enter into contracts for you, and using third-party warehouses so that you're not owning your own inventory in the US. You're sending it to them, and then they're forwarding it in their ordinary course of business. This hasn't been challenged by the IRS, and I don't think they will challenge it. It would create a huge mess, and I have hundreds and hundreds of clients that are operating like this right now at a very, very low risk and a very, very low tax, especially in the US. The US can't just charge, everyone sells stuff to Americans. The US can't charge income taxes to the entire world. It's insane. So if you need help setting this up or setting up the structure, or like especially with the bank accounts or filing the annual tax returns, because every LLC does have their Form 5472 to file each year, or their Form 1065, you have tax responsibilities and things you need to file to avoid penalties and to keep under the radar and do everything the right way. That's what we do. We help our clients get set up with the right banks, the right companies, the right ownerships, the right docs, and the right connections, and knowing about the dates, and basically keeping this off your plate as a business owner so you can focus on scaling your e-commerce business. So I hope this video was helpful. I have a report I can share with you. I'm going to see if I can put the link in the description for the, I call it the tax-free LLC support menu. It's not legal advice, support memo. It's not legal advice, but it's a shareable document that you can click and go through there. And if you're having troubles getting U.S. bank accounts, I have videos on how to do that, how to get addresses, how to do all the stuff. I'm doing a series right now on getting phone numbers and getting bank accounts and just going through all the steps of registering an LLC and doing everything. If you have the time to do this, that's great, go for it. But if you don't have the time, you want to get it done quickly and professionally, you can schedule a free call with me and my team at the link below as well. So I'm there on the paid calls, and my team's doing the free calls. I look forward to talking to you, and I hope this video is helpful. Like and subscribe. I'll see you in the next one.